Hey, what's going on? So, breaking down this trade right here, I'm actually live in a live trade right now based on my strategies. So, I have it set up where, let me show you what I got going on here. So, these fibs right here are, I think, almost 2 years back tested. I regret that I forget where I left off at because I could have made this even stronger, but it is pretty strong. I think it's about 2 years back tested. So, basically, the way this works is when this line is breached right here, I can hold my buy all the way up to this line here. Okay. It's supposed to be green. So let me explain this here. Now this is proprietary right here. That's why I have the levels off. So you have to do your own research. But basically we got a fair value gap down here, ICT, that price may be wanting to push down to come into this here. Okay. Let me show you where I'm long at. Let me see. Because I'm in drawdown right now. Let's see. One of the positions I just broke even on. So hold on. I'm looking at my broker right now. Hold on. Okay, so I went long here. Yeah, delete this. So I went long here, and I believe I went long right here. So wherever it is, I went long here and here. I'm looking at, no, actually, it shows I went long here because I'm at break even on one of the positions. Yeah. So I'm in drawdown right now, but I probably should have waited to price come down into these fair value gaps, into this fair value gap. But actually, the fair value gap is here. I'm sorry. And I'll explain this. Well, this is the 5 minute. Let me go back to the 15 minute because a higher time frame is always more important. Yeah, that's why I had it. I'm like, why did I mark that up like that? So on the 15 minute, we got a fair value gap that's here. Okay, we got a fair value gap that's here. So I'm thinking I probably should have waited until price came down into this gap and for it to hit the top of it, mean threshold, or fill it in. So I mean, the way I got the position on here, I can endure this drawdown if price came all the way down into this gap. If price came down into this fair value gap, I didn't over leverage to the point where it's going to hurt the account, but obviously I'm be tripping out. But this is what I'm expecting to see. If this is the worst case scenario here, and if I take a loss, I'm going to report that. You know, I'm not going to like not shoot the video. This is real life. I mean, I'm trading what I see. So once this was breached right here, that's why I have that dotted line. Based on the back tested data, it should come up to here. Now, I do have a stop loss reentry, but it's extremely low. It's extremely, extremely from where I'm at right now. So if I take a loss, let's say if I take a loss here, then I can get back in here short and sell it all the way down to at least here. This is extremely strong. Now, price may continue to keep pushing down, but I have it set up where if it touches this purple line here, it's going to come down to here. Now, obviously, this is just a pattern based strategy. I'm not a pattern trader. I understand the structure, but I wanted fibs to be on here to help me with seeing what I may not see on a higher time frame type of thing. Now let's talk about the structure for people that want to talk crap. Saying I'm a pattern trader, I don't understand the structure. Okay, well this is this is a bullish breaker right here. Okay, so it would make sense if price came down here and it kept dropping that it would stop right here because this is a bullish breaker. So um, we got to look at the highest up close candle, which is this one here. Okay, but really we want to see displacement right after the highest up close candle. What I really want to see is a gap. I'm on a 15 minute. Okay. What I really want to see is a gap, but we got a volume imbalance right here. You see that? We have a gap, we have a space in between the two candles where the wicks are touching. This is ICT textbook. This is a volume imbalance. This is for people who say I don't understand the structure while I'm trading patterns. Like I get offended by that because, you know, all I got to do is just show and prove. I understand the structure. I just use the fibs to help me see things that I may not see at the time. I want back tested data that shows if a certain line is hit, it's going to come down here. Like I said, price could keep on dropping another 100 points. I don't care. I want the lion's share. I want the meat of something that happens every single time. Okay. So this is pretty strong so far, but I actually, be honest with you, I need more data on these purple lines. This is my stop loss re-entry. I need more data on these two lines here. So this is a volume imbalance. So this is a bullish breaker. So let me mark it back up. And with the bullish breaker, the highest up close candle, the very next candle, we want to see displacement. So we don't have like a gap, but we do have a volume imbalance, which shows this could be strong. Okay, so let me mark this up. Okay, so let me change the color on this because with a bullish breaker, I usually have it like a certain type of green. So this is a bullish breaker. This is the whole highest up close candle on a 15-minute chart. So it makes sense if it comes down here to, if I'm totally wrong, okay, my actual stop loss is down here. What I just showed you is stop loss or reentry. To be honest with you, if it comes below, if it peaks its head below the bottom of this candle right here, really and truly, I should be getting out when if it breaches this fair value gap here. It look like it's continuing to come down. If it comes down to here, I really should get out, but I'm get out for sure if it touches this bottom of this candle here. Okay, because usually the way it works is you want to put your stop loss below the candle that created the gap. So really it should be down here, but I'm gonna get out here. So I'm gonna put an orange line right here for the stop loss. Okay. So this is the stop loss here. And if it comes down, I'll just take the loss. And if price keep dropping, then I'm going to re-enter when it touches this line here. Really, this purple line is if this is breached, like sometimes with this green, it's supposed to come from here. If it touches this green line, it'll come up to here. Let me go to the 5-minute chart. Hold on. Okay, so this actually was a good move right here because I didn't take it because trying to I was just getting up. But this is actually a good move right here because I would have bought right here. And then the second position, I always do like a light position here. And it'll be like little to nothing made. So this is the bias from here to here. And then if it touches this line here, it'll come up to here. But usually if it touches the green, it'll come up to the yellow. But this is a good move right here because I would have bought right here if I would have seen that. And then I would have been like, okay, this is going to be a clean break up. But when I saw this retracing, when I saw this push down right here, if I would have saw this here, I'll be honest with you, I would have been buying because the stop loss reentry would have been down here with the purple line. You got to be okay with taking the loss. And based on based on what I'm seeing right here, let's see where I had the stop loss at. I would have had the stop loss right below the middle candle that created the gap, which is here. You see this gap right here? Price just came down into this gap. It touched it, and then it retraced down into this 5-minute gap. So my stop would have been down here. That's exactly where my stop is now on where we at right now in price, and I'll go back to it. So this would have been a good move to go long in while price is pushing down. That's the way that we've been trained. That's the way I do it. Where price is pushing down, I'm going long. That's what ICT taught us. Okay. And then the target would have been right here. So when price touched right there, I would have got out. And then I could have got back in here. And this was a straight push. But usually if price touches this green line, it'll come up to the yellow line, but that's more like gambling. When it comes to the green, that's the move based on back tested data. When it touches the yellow to the yellow, that's the move based on back tested data. So I don't have the levels on here because this is proprietary. You got to do your own work, your own research. So it looked like right now it's engineering liquidity. Is that what it's doing right now? No. I'm not going to take another long, but if it comes down here, normally I would go long again because this is pretty strong right here. It's a very slight chance that price is going to go from where it's at right now all the way down here to the purple. Okay, but we got to look to the left. What do we see? Let's look at the structure itself. Right here we have a bearish breaker. So we got a high, we got a low, then we got a higher high. Okay. And I was showing this earlier on a call I was on. This is a 3 drives pattern. So we see price was pushing down here. The first push you don't count, but the second one you do. Push 1, this high was broken. Push 2, this high was broken. Push 3. And then we had the breaker structure here where it closed below on the body. And then you could sell it down to the 1 low or 0 low. Okay. And that's the move that I did yesterday as well. But we're talking about where price is right now. So this is a bearish breaker. Let me mark this up. So I'm going to mark up the lowest down closed candle. I'm just showing you, I understand the structure. It's not just the fibs. The fibs is just helping me see. Sometimes you don't see stuff that you should see or that you study. Okay. Now let's take a look at the structure here. So it's not just the lowest down closed candle. Okay. It's the lowest down closed candle that had displacement. See, we're getting into the PhD level ICT's teachings. See, the lowest down closed candle would be this one. Now the next candle, we do have a volume imbalance right here. Created a gap where it's a wick touching in between the space. But this right here, this one created the actual gap. So I'm thinking the bearish breaker is probably this one here. Did that make sense? The lowest down closed candle is here. Now this one I guess it could be classified as a bearish breaker, but the one that had the most displacement was this one because the very next candle, it created a gap. It created displacement. You see that? We had a strong push up from this candle here. This was a strong push. This one created a small push and we had a volume imbalance. So I'm going to mark this one up. On the 5-minute chart, it's a bearish breaker. Okay. Oh, so now we see price pushing up. Oh, damn. I didn't even catch that. So now we see price pushing up to my target up here. Okay. I'm holding out for the target. Okay. So the target is when price touches this line. This is a nice push, but I'm not going to get spooked and be like, oh, I should have sold. No, I'm going to hold for my target because what's the point of doing all the back testing? All that back testing, knowing that when this is touched, this is going to be touched. No, we're going to hold out for the target. Now, I may sell a little bit before it hits it because sometimes, it'd be, I may sell like when it gets to like here or something like that. Sometimes it do fail like right before it gets to it, but that's probably 2% of the time. But I'm still holding my long. All right. This is where I went long at here. And I went long here. All right. So let's go back to the bearish breaker. And this looks like, based on what I'm seeing, it looks like prices wants to push up pretty strongly because we had a bearish breaker right here. And let me show you what happened. Now let's mark up the other candle too, just in case I looked at this wrong, which I don't think I did. But let's just say this is part of the bearish breaker, these two candles. Let's push it up a little bit to this one too. We can include both. But based on ICT's teachings and what I know, this is the bearish breaker here. All right. It really don't even matter when we take a look at this, but you see price, it pushed strongly through the bearish breaker. You see how it pushed up through it, through this huge bullish candle here? To me, that looks like a sign that it's trying to push up pretty strong. But I mean, and these wicks, I don't like seeing these long wicks right here for my bearish move right here, my bullish move. This is showing exhaustion, but the data shows that if it touches this line, it's coming up here. And we got this bullish breaker that was broken with a strong candle. It didn't just push up. It didn't just work its way up into it. It just broke it. But we still got a fair value gap down here that has not been hit yet. It has not been touched or filled in. This is on a 15-minute chart. So look like price may continue to try to push down and either touch this fair value gap, either touch it or go to mean threshold or fill it in and then push up to my target. That's what I'm thinking. But I could be wrong. My stop loss is down here. And if I get stopped out, then so be it. You want to know why? Because we got another train. We got another bus stop that's coming here. If price touches this line, I got data that shows it's going to come up to here. Okay. You see how that's working? So as long as I didn't over leverage, which I didn't with these two buys, I'm okay with taking this loss if that's what it's going to be. But it should come down here to fill this in or touch it at 50% and then continue to push up. But based on this wick, based on this exhaustion right here, it's definitely going to start pushing down, or it may come up to about 50% and look like it's going to hit this fair value gap before it comes higher. That's what I'm thinking. All right, so I'll check back in. All right, so I'm back at it. So we got price pushing up. Hopefully it hits the target so I don't have to record for another 5 minutes, 10 minutes or so. But basically I went long, I went short. My target is right up here, this line, because I got data that says if this line is touched, then I can get out here. I'm going to hold for the target. Once this line was breached, this is a perfect move based on the way I do this. This is a really great move. Okay, so it just hit my target, so I need to get out. Damn. Let me get out. I'm out. All right, so I don't know what just happened. I had two positions with the broker, and I only see one position. Okay, hold on. I'm looking at the. All right, so okay, so there it is. I should have kept holding, but I mean, when it hit the target, you got to get out because I got data that shows if it touches this, it could reverse on me. So this is just a quick scalp. So prices continue to push up, but this is a perfect move. This is a good move. My position to buy it wasn't the greatest because I should have seen that price is going to come down here to this 15-minute fair value gap. But I bought here and I bought here because I knew price had to come up here, or I understood that price was going to come up here. So the next move is if it touches this line here, which it looks like it might, then it's going to come up to here. So I can get back in on the scalp and wait for price to come up to there as well. I explained in the first video that I was sort of confident about price coming up to here because it had pushed through this bearish breaker so strong right here. But we had a 15-minute fair value gap, which is this box here. And the bearish breaker is here. So that move worked out. It was a cool little scalp. Thanks for watching.